Hi, good morning everyone and welcome to today's morning report with me, Richard Parry, analyst at Antex Markets, for Thursday the 12th of June. The overnight handover has been a little bit cautious from the first real correction that we've seen on Wall Street for some time, probably back to the 20th of May actually, the last time there was a serious decision by traders on Wall Street to sort of come off out of their positions, and it's sort of filtered through to the European trading with a little bit of caution, certainly on the FTSE, which closed quite significantly down yesterday. It's further down, about 1/10%, not too bad, but still there's signs of intent there in a correction for these equity markets, perhaps. You've got concerns over the events continuing to spread of the military activity, of the militant activity in Iraq, and that is certainly having a bit of a destabilising effect potentially on the Middle East, and investors are slightly concerned, I think, around that sort of effect that could have on potentially for oil prices, and certainly oil prices are beginning to rise on the back of that. Anyway, so what impact is that having on currency markets? Well, currencies are slightly, to be honest, they're slightly positive in terms of risk. The dollar index is falling back today. You've got a series of impacts on the dollar today, most notably probably the Kiwi dollar, which is significantly higher, around $1.50 now. It's moving higher, and that comes after the Reserve Bank of New Zealand opted to hike interest rates to 3.25%. That was the third consecutive rate rise by the Reserve Bank of New Zealand, and also signalling that we're going to be possibly open to further rate rises as well. So certainly the New Zealand Kiwi dollar is appreciating today. Further moves also from sterling as well. Rebound back above that 68 big figure level, which was a technical. Saw a lot of stops triggered on the move above that level, and it's sort of now trying to settle down a bit around 68.20, 68.30, but still certainly a few stops taken out there, I believe. Now, in terms of today, the economic indicators we're looking at are the retail sales for the states. They are forecast to come in at plus 0.6% today, so that would be an improvement on the plus 0.1% that we had last month. Certainly last month was a very disappointing figure, so the market will be paying close attention to the data at 1:30 this afternoon. In addition to that, you've got the jobless claims, which is a weekly number, and that is forecast to just slightly improve to 309,000 jobs on the week. So that takes me to my chart of the day, which is the Aussie dollar, and the Aussie dollar has been improving for the last, I think, 7 out of the last 8 sessions. It's had a very strong improvement in this time, and we're now up towards the peaks of this trading range that the Aussie dollar has been in for the past probably 2-3 months, since breaking above that 92 big figure mark. It's been sort of trading sideways in this band, and is now back up towards that. Now, what is it going to be able to make a challenge on those highs? Well, if you look at these momentum indicators, they're certainly in positive configuration. RSI certainly has further upside potential. Certainly back in April it got up to well above 70, 75 it almost got to. Currently in the low 60s, so further upside potential there. MACD lines are only just really getting going to the upside again, so they have upside potential, and stochastics are bullish, although you could argue they're slightly rolling over, but still I think that is in positive configuration there on the daily. On the intraday chart on the Aussie dollar, it's now gaining upside momentum in the European session. That slight dip that we saw early this morning, that came on the back of weaker than expected employment data, but certainly that's now used that pivot level around that 93.60 mark, which is the key low on the intraday chart, on the first key low anyway, around that 93.60 mark, and it's pushed off that and looking to challenge the highs again. The really important low on this intraday chart, I'll zoom out slightly here, is this big pivot level around 93.20, which has consistently proved to be the basis of support and resistance, and is now currently acting as support. So 93.20 is the big level there on that intraday chart. But if you look on this daily chart, it certainly is now testing the initial move on 94.08, which looks to be having a good go at today. But above there, you're looking at 94.25, and also then up towards the key high at 94.60. So I think that's is probably what we're going to be seeing in this in this Aussie dollar chart. You've got some nice momentum building to the upside, and it certainly is building now. And I think with the upside potential in this in these momentum indicators, I think you're going to get a serious test of that 94.60 mark on the Aussie dollar. Okay, so I wish you good luck in your trading today, and I will speak to you later. Thank you.